Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to this week's Nadex Weekly Market Analysis. It is and I also have Jen today. She is school is done for her for the summer. It was a great experience, but now she is back with us, and she was up a little bit late last night. So hopefully she does well today for us. But we will go ahead and jump into things real quick just to make sure that she isn't moving around too much. All right, so I would love to say that there hasn't been a lot of movement, but from the open until now, it has been absolutely just insane and crazy movement. Kind of strange. There wasn't really much news. There was basically a world report on growth that came out. So if you have been looking at the markets and wondering why they're bouncing all over the place, that would be why, particularly in things like oil, which have been kind of an explosion. And again, I'm hoping that doesn't mess it up for tomorrow. You guys know when we see a lot of movement the day before, there tends to be a little bit of a movement hangover the next day for the oil inventory report. So hopefully that's a good one for today, or for tomorrow. But we'll just go ahead. Let's just dive right into things right now. For those of you that don't know me, most of you do at this point, but for those of you that do not, if you are new on the broadcast, I run a company called Keep Trading Simple. I've been working with Nadex now for a number of years, doing live presentations. I've done most of their, if not all of their education summits. I've written articles for them, really trying to give you guys as much kind of information and really hopefully courage to get out there and start trading the markets if you're unaccustomed to trading with Nadex. I've created a number of different strategies that you're able to use with Nadex, both, but I guess here and external, but for the most part, at this point, you can pretty much adapt Nadex to anything. They've expanded the types of contracts and the numbers of contracts over the years that I've been working with them. I've been trading since about the 2000 time frame. Started the same way that most people out there do. Back then it was books. We didn't really have YouTube, and I would go to seminars and things like that and learn all the wrong ways to do things. Learn, stocks and traditional options, and then finding currencies about 6 years in and love the 24-hour market and the leverage with it. Learn to trade futures. I became a financial advisor. I figured, listen, I know all this stuff from the outside. I'd love to get like that secret inside, the special sauce that only advisors and those companies know, and got in there and realized it was absolutely nothing like I thought it was going to be. Learned a lot about bonds, so I was very happy about the situation, but I left very fast realizing that, it was nothing like I thought it was going to be. I wasn't analyzing charts and looking at people, and but just blown away by kind of what the perception versus what the reality was. I've traveled around the US and Canada helping people kind of find their way. I'm very big into keeping things as simple as possible. So when you guys look at my charts today, you're going to see that I don't have like 12,000 indicators out there. I'm not running MACD, RSIs. I'm not running fibs. I know how to use all of them, but I feel that they are tools that are typically used incorrectly. People are always looking for that special edge, not realizing that professionals know exactly what you're doing, and the markets will, they move based off of how, figuring out how to take money from a retail trader. So typically on my charts, you're going to see supply and demand. I'm a price action trader. I tend to like kind of shorter duration things. I'm not one of those guys that loves to just leave large positions out there for 6 months. So I do like to look at things on the smaller time frames, although I do definitely respect larger time frame levels, and we'll mention that today as well. I actually have to update this picture. I grew a beard for COVID and still have it. The boy on the left, his hair is basically down past the shoulder now. That little one is 3 now. She's I think like 1 in that picture. So, and we have a little one on the way due in October. So gonna have to update that one eventually. But yeah, kind of crazy. But I do stay quite busy. So one thing, before we kind of move on, I am a big proponent of you guys using technology. What I mean by that is alerts. I mentioned it. I think I got 2 emails last week from people asking about, how do you set the alerts and how do I get it to go to my phone? Use technology. There's no reason to have to sit in front of a computer for 18 hours a day. I'm an if this then that trader, so you'll see a lot of times if price comes up to this level, I'd be interested in shorting it. How do I know when it comes to that level? How could I take advantage of that to be able to trade it? Very simply, set an alert. Right? It can send an email to your, to your email box. It can shoot an alert directly to your phone. There are many ways to do those things. Use technology. There's no reason why you just have to sit here, right? I'd say go outside and have fun, but right now the cicadas are kind of ruining that for a lot of people, right? It sounds like I got 3 diesel trucks outside right now, at least in Maryland. But that's it. So let's dive in. Before I can touch a chart, though, I do have to go over a Nadex risk disclaimer. Trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost end of the transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results, and none of the material presented herein is to be construed as a solicitation, a recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the IG Group. All right, so let's dive into head first, right? A little bit of a cold pool, but hey, let's do it. Upcoming news events. As you guys know, again, I just kind of give you the I don't know, the statement, right? I don't like spending all day sitting in front of a computer, but I absolutely love news trading. It offers amazing catalysts of when to trade, when we're going to see the most movement. So we're going to talk about this week when will basically the next kind of best trading opportunities pop up. We already know, if you haven't watched it, if you had your head in the sand, been doing that ostrich trading, Thursday is going to be an absolutely enormous day. And actually, most of the movement today was kind of the pre-news of that. I'll explain it to you in a few minutes. But I'm very excited about the news the rest of this week. Monday and Tuesday have been kind of sleepy days. But Thursday is going to be like an amazing day. A lot of potential out there. Then we'll dive into indices. The indices have been definitely moving, but man, are they whipping back and forth. There's probably a lot of people out there, like budding futures traders, that have lost a lot of money this morning already. Just by the way that the market has whipped back and forth with literally kind of like hairpin turns, there's definitely some people that have lost some money this morning. Now, again, one of the advantages of Nadex, again, I mentioned it in the disclaimer, the most you can lose is the cost of the transaction, including the fee. The nice thing is when things like that whipsaw, you could be losing money and then bam, it comes right back up into your profit zone again. When you're using binaries or call spreads. So it's been a morning that has, been very, very beneficial for both of those assets. But we'll cover indices, then we'll cover Forex. There's been some actually big headlines in the last couple of hours, so I'll cover Forex, as well as Thursday's news is very, 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 very Forex focused. You start talking interest rates, the dollar becomes a huge player. Not only are the indices in play, but the dollar more so becomes a play. And again, Nadex offers, euro dollar, pound dollar, Aussie dollar, dollar yen. We got, definitely a few different pairs we can trade over there. And then we'll cover commodities. Now, energy is like off the chain right now. I don't know if you guys have looked at energy this morning. If you attended the 8:45 Nadex broadcast today, I mentioned at the very, very end that natural gas was just flying. Well, guess what? Market opened. Oil said, hey, we can do that too. Here, hold my beer, and just took off. Oil's been moving, and both of them actually. I think right before we hit the go button on this presentation, natural gas was up 3.8% on the day already. That's a big move, right? I mean, how many days, in the stock market do you hear of something being up 3 and 4 and 5%? It's a big move. So we'll cover those and where we go with them. All right. So with that said, let's just dive right over. Let's go over, and I'm going to start here with news, and we'll go over to Forex Factory. Again, we could use Forex Factory. We could use Daily FX. I have that up there as well. I like that one for the consumer sentiment. It's funny. Crude oil used to be, up in the 80% range, and now we're back into that 53% range, which shows, tells us a lot right now of what's going on. But anyway, for the rest of the week, it's easy if I just click down and we can kind of scroll and see what we got. So early morning today, we did get some disappointing economic sentiment data, and you can see that, the euro is down because of it. Euro pound is up, just a little bit. It's more or less kind of flat at this point. As well as, again, you can see that the pound dollar is also down. And you could say, well, is that dollar strength? A little bit, right? A little bit, but I would say a lot of this has to do with the fact that if you look down kind of in the top headlines here, there's a bunch of different headlines talking about how the EU is kind of threatening the UK. If they don't do this, and if they don't do this, and a lot of things. I guess, what was it? There was Scottish. There's something else. There was a Scottish rights. If you don't really need to know, just know that it's been in the news, so it's been kind of hurting the pound this morning as well. For the rest of the day, there's not really a whole lot. I would say that the CPI number year over year for China is a good one to look at. Most countries are saying, oh yeah, we're going to see inflation, but it's transitory. 1.6 in my eyes, I feel like is a little bit low, right? For a year over year number. We already have some forecasts for what Thursday's yearly figure is going to be in the United States. China should be higher than that. So I do feel like this number is a little bit off. And again, this will You may say, well, how would we trade that? You trade this with the Aussie, because as things are getting better in the Chinese economic environment, they tend to buy resources and things like that from Australia. So it's kind of more of an Australia play tonight, and we can kind of check out where that is. Now, tomorrow morning, okay, we have the BOC rate statement. Okay, we are seeing right now the CAD kind of getting some weakness, and that's kind of what I expected. I expect that this statement will probably be strong for the Canadian dollar. The reason why is because we've already heard about them tapering. They're not going to change the overnight rate. They're not quite at that stage yet. But they've already mentioned tapering and things like that. And again, everybody seems to be talking about how well the recovery is going. Any positive news about that, again, that could definitely lead to the dollar CAD kind of dropping through the floor. So the fact that it is rising up right now, if you want to sell something, you want to sell it for as much as you possibly can get. So it kind of matches up on a technical basis as well. Then we have crude oil. Now, we do have the crude oil inventory forecast now. I always say be a little bit cautious of this forecast. It's not accurate often, right? It's right sometimes, but more often than not, it is not correct. So, we do have a figure coming out later today, the API number. So again, we do have some data that will kind of, I would say, help foreshadow this a little bit. But right now, and again, I'll show you this data in a second, strong global recovery is really what's driving oil prices right now. And I'm hoping all of the money isn't made today, so there's no movement tomorrow. That's kind of what I'm looking at. But I expect that this will be a miss as well. You can see last time we had quite a large miss, right? Last time it was supposed to be a forecast of minus 1 million barrels, and it was minus 5, right? So 5 times less than what they had originally assumed, okay? So Thursday morning is where kind of the craziness really kind of kicks in. Now, if you are unaccustomed to trading currencies, okay, what I would recommend, and you may say some people like currencies, some people don't like currencies. Overseas, they could care less about the U.S. stock market. All they care about is currencies. It dwarfs the stock market. So if you're not trading it, you're missing out on a lot of opportunities. Starting with 7:45 a.m., and again, this is like kind of like a bam, 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 right in a row. We have a monetary policy statement and a financing rate coming out of the EU. Now, they're definitely not raising rates. That's basically I think the projection of that is slim to none. But again, talking about recovery and tapering, we got some tapering data out of Germany today. Actually, I guess they extended it a little bit here. Germany to extend third pandemic aid package to end of September. Okay. Now, you may say, well, that's definitely weak, right? It is, but it also kind of puts a deadline to where we know when it's going to be. And that makes sense. I mean, people are tapering. They're kind of extending it. Remember, Germany did have kind of like a third wave kind of lockdown situation that we didn't necessarily have. What didn't draw headlines as much. So, not necessarily a bad thing, right? But I do feel that they will mention some of the kind of the status of the recovery and the rollouts and how the vaccines are going. And that could provide some interesting movement. Now, do you trade that against the euro dollar is a big question. I would say you have to use some caution on that, and we'll see kind of where it moves pre-market, because right after that we have a big CPI number, which will definitely affect the price of the dollar. So it may actually be one of those ones that you jump over and maybe go into one of the other kind of counter currencies, maybe the euro pound, maybe the euro yen. Couple different ways to play it, but the euro dollar may be an increased level of risk on that one. And the crazy part is their press conference is right at 8:30. This is where the questions that they aren't able to prepare for come from, the surprises. That tends to be where most of the movement comes from, which happens to be the same time that we have CPI. So it's kind of like it's like having two firecrackers. One of them's lit, or maybe both of them are lit. You don't even know. It's like, what hand do I throw it to, right? So you need to be cautious of that. Now, CPI and Core Cpi. This is the most watched news event of the week. These two right here. The reason why it is the most watched is because, again, we've heard from the Fed nonstop, right? Nonstop that we're going to see inflation, but it's transitory. It's nothing we need to worry about. Now, earlier this morning, and again, I did mention it there. Let me see. Let me pull it back up again so I can kind of read the actual note itself. Where is it? Now, this is why this is important. The consumer price index for May is expected to be 4.7% over the last year, right? Meaning the goods and services went up 4.7%, which is high, which would be the most since 2008. On a core basis, which strips away the more volatile cost of food and gas. And again, that's what this core rate is right here. If you click on it, you can see it, right? minus food and energy, because those are where a lot of the inflation comes from. On a yearly basis, prices are expected to rise 3.4%. This print would be the hottest annual core inflation reading since the early 90s. And again, at this point, what does the Fed keep telling us? Nah, we don't have to worry about inflation. We're going to let it run hot, and we're going to let it go for a while. The economy's in a very delicate, fragile position, right? And then Yellen drops a bomb this weekend and says, oh, it would be healthy for us to raise interest rates. It would be good for us to raise interest rates, which kind of goes against what the Fed was talking about, right? The Fed has been very kind of pro-politics lately in what they've been saying, and now Yellen drops his bomb. It's like, we need to raise it. We need to get it in there, right? So CPI, again, this is month over month. So according to the Fed, it's supposed to be transitory, meaning that it's supposed to pop up but then go back down again. And again, by back down is adding another 0.5% here and there. Is that going back down, or is that just not going up as fast as what they thought, right? There's a difference between transitory, meaning it's going to come and then go away like a tide, right? This looks more like a flood to me, right? When it is positive, and then it's positive again, and then it is positive again, and then it's positive again, that's more water dumping over the dam. That's not water coming high and then the moon sucking it all back out again, as well as unemployment claims, again, dropping lower, okay? And that was an interesting figure as well, and you can see it keeps getting green and green and green. Remember, our economy is in a very volatile situation, right? So, but yet we're getting all these greens. So this is why the CPI number is so important. And the way we're going to play CPI on Thursday is, again, inflation is good. That's an interest rate discussion. That is bad for the overall indices. It's good for gold. It's good for the dollar. So all the currencies with the dollar in the second position should go down. Again, if those numbers are high. If they miss, right, say they come in at like 0.2, still technically positive, but much less than expected. That is like that's like an Acme rocket under the indices. Why? Because if inflation is disappearing, there's absolutely no reason to raise interest rates. We can stay hot for a lot longer. And that will be literally like, 5 Red Bull Monster energy drinks, for the indices going higher, right? Because there's no reason to raise interest rates. We can run hot for a lot longer if there's no interest rates there. So again, that's where a lot of the explosion things like that are coming from. And I'll tell you right now too, we'll see what the contracts look like on Thursday. I think what we really need to focus on is, again, looking at the contracts. We're going to have to be a little bit more aggressive when we're looking at them. I think diving in there on Wednesday night would be a good idea. Now, the problem with diving in early is they will have a lot more time premium because, again, we're talking options here, right? There will be time premium in there, but the volatility, the VIX, is not going to be as crazy because it's farther away from the news release. So I'm wondering if one's going to cancel the other one out. There's no way to know until we see the contracts on Wednesday night. The other thing you can do is you can go into the shorter duration contracts right before news. Being an 8:30 release, this gives us it gives us a little bit of time, right, to get in and find a proper strike. We can go in there and go after an 8 a.m. 2-hour strike and be able to take advantage of not only the CPI data, but the ECB press conference about recovery and the unemployment claims. Those short duration contracts, again, they'll have smaller strike widths, so it doesn't need to move as far. Again, the big question is going to be is how much premium is packed into the different both options, and again, at that time, maybe even call spreads. I mean, knockouts may work there, but again, if there's any type of whipsaw like we've seen today, knockouts aren't going to stand a chance. It's going to be a purely binary and call spread based morning. And again, all eyes have been talking about this. Now, Friday, we don't have as much in the U.S. We have BOE Governor Bailey speaking, and again, that could definitely end the pound on a big note for the week. We've seen a lot of other data coming back and forth. If you guys don't know, the UK has done quite well with the recovery. They had a little bit different process. It was first dose for everybody. That reduces it down. Their economy is doing better. They're talking about rate. They've actually mentioned raising interest rates. So I think that's a very important speech. It's a little bit after the UK Open, but should provide enough boom. And then we have preliminary University of Michigan consumer sentiment. Expected to be up, but you can see, again, here's the economic sentiment has been down. This is actually a consumer-based thing here. Could be decent. Looking at its history, you can see that they keep shooting high, and in at least the last two, they've shot a bit high, right? And then it's coming much, much lower than expected. So kind of one of those things, I feel like right now the consumer, I feel like they're going to be happy. I feel like, and again, I don't know who they're polling. It's just, it's random polls. It happens in the middle of the month. If you think about what's happening during that time, you can kind of get a little bit of an idea. And it's expected to be, again, it's expected to be higher than last time. It's actually supposed to be revised up a little bit from last time. But is it the 88s? No, no, it's not all the way up in that 88 range. So that could definitely, again, if this data is bad, like meaning when I say bad, I mean bad for the Dow, the YM, the NQ. If this comes in higher than expected, they should roll to the downside. Preliminary preliminary consumer sentiment could be the ingredients for a feel good Friday. And it's something we've seen numerous times happen where, for no really apparent reason, we hit noon and it's just kind of like up, 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 and we go, ending more on a high note for the weekend. So, as long as we don't have some type of catastrophic failure here on Thursday. So, a lot going on this week. It doesn't seem like it, but there's a lot of very important news in here. And when I say, very important, meaning it's not just an oil release that affects one thing, right? It affects a lot of different things. The price of the dollar, inflation, global growth, all those things matter. Now, this morning we've had some craziness going around. A lot of that is coming right from this. That the World Bank released I guess their June economic prospect report. The headline reads, "Global recovery is strong, but even as many developing countries struggle with the pandemic's lasting effect." We already know about this. We know that there's been kind of an inequality of vaccine distribution. We do know, we heard this week, that we are sending 75% of our excess vaccines right now overseas to other countries. The countries that are having the problems are, again, the third world countries. Again, it's a distribution of wealth issue. It was kind of like, hey, us first and then everybody else, right? Then you can have yours. They're still struggling, but the countries that are in recovery mode, the largest ones, they are driving, look at this, the global economy is expected to expand 5.6% in 2021. The fastest post-recovery pace in 80 years, right? 80 years, largely on strong rebounds from a few major economies. So the few that has the vaccine are driving this, which means as the third world and kind of lesser countries, right, smaller countries, as they start to see their recovery, we can have even more growth coming out of it, right? So it's kind of crazy. It says, global output is above, 2% pandemic levels. It'll be a little bit off. It's going to miss huge, huge, huge amounts of growth here. And again, there was a couple other headlines on it. I'm talking about the growth there. It sees the economy expanding, 4.3%. That was how much growth. This is how much it's expanding. So it's all positive news. And again, this is what has led the energies, particularly oil, to go absolutely nuts this morning. So, I mean, we're making a comeback. I mean, some people have said, hey, the comeback's here. We're here. We're recovered, right? I believe that was Harkin a week or two ago. Said, yeah, we're recovered. We're back. We're past in less than 1 year, or 1 year, I guess, is what the total was. All right, so let's dive over into charts. Like I said, we've talked about the movement in 24 hours. The dollar cat is going up, and we'll bring that in on the chart. So, here's what we've seen early this morning. This was I mean, the only thing that I can imagine that this was the internet issue. If you guys weren't aware of this, Twitch, YouTube, many other websites were having major issues. There was a problem in New York. They diagnosed it. They were supposed to be fixing it, and that led us higher. And we were getting really, really close to being able to break through this 42.38 area. Then all of a sudden, the world report came out, and we got a base here at the U.S. Open, and then this just got hammered to the downside. Hammered to the downside. And again, does that mean we still can't close on a high? Absolutely not. It just means that everybody was prepared for this to break through. And again, when you're looking at this, you're saying, oh, look, this is one of those things that you got to watch out for. It is why I trade supply and demand and not support and resistance. People look at us and say, oh, look, there's resistance, right? As soon as that breaks, we got to go long, right? Everybody knows the rules. I mean, this is trading 101, right? If it breaks through, go long, right? And we'll put our stop, maybe down here below the last pivot, right? You can see it went through. U.S. trader stepped in, and again, this is a session open base trade setup. Boom, it collapsed back down again, and now it's making a rally. So I would say overall, that world report, it is a global report, but the reason why is that we're seeing that much growth, and it talks about a rising interest rate environment, which is not necessarily the best thing. So, but this is what I'm talking about, how people need to be careful sometimes. And again, if you had, things like this where we immediately in 1 hour go all the way down and come all the way back up again, large spikes like this very, very fast, these tend to be a little bit more dangerous when you have knockouts in there. If you're in a futures contract, right? I mean, think about it. This is the ES, right? If you guys know futures math, right? That's 17 points to the downside, right? Almost instantaneously. That's a really fast move, right? Your account can go negative very, very fast. And if you didn't use a stop loss or you didn't, properly, position size yourself, that's a lot of money getting lost really, really fast. Same thing. Is this started to push through? Had anybody been long here looking for this, again, support and resistance kind of basic setup? That's a very, very fast drop. That could hurt very, very much inside the futures. And again, you can see it's rallying back up, and we may even end up green on the day if we're able to continue to push and break through. We could technically hit the 42.38 today. As far as what we do with the trade, I mean, for me, really, I'm looking for, kind of, I would say clean opportunities. I think this level down here is more of a clean opportunity. We had kind of this big push through, and again, we've pushed it again. I would say when we get down to this 41.95 level, I think that offers a decent level to kind of get long or some type of a popping area from. It was the last time we had basing, and again, it based on both sides. It was kind of one of those area of interests, and then we had a very strong push. And again, it was at that kind of 8:30 news time or 8:30 open-ish time. Right now, I would say that we're really kind of in an expanding area, right? I mean, we've seen the highs get a little bit higher each time. And again, I think the next time we push up, I think is probably where we're going to end up hitting the 42.38. Downside, you can see, again, we had a little bit of a pullback. We had lows here. We had lower lows. We had lower lows, and we had lower lows. So it's kind of one of those things where it's kind of up here, but at the same time, it's kind of coming to the downside. And the range is expanding back and forth with the chop. CPI, as I mentioned, is very, very important for this pair, or for this asset. The reason why is because, again, the second you start raising interest rates, it becomes a much harder lending environment, and it tends not to be good for the overall stock market, which leads us to turn and roll back to the downside. I'm kind of hoping we get a pop through before then. I just feel that if the inflation data is really good, I feel like that could be a big turning point for this. But right now, I don't necessarily have the cleanest entry. The way that I recommend playing this, and we always have this issue where we're like, hey, listen, it's 12:30 on a Tuesday afternoon. Everybody's at lunch. What do we do with it now? On a 15-minute chart, again, I think we wait till 14.95. On top side, you can see we have an area marked off. There was the gap there. We based in it here. We based in it here. We used it as a top, a top, a top. We based in it. It was a top. We based in it again. We pulled over. You can see that there's a wick over wick right there, and it pulled back again. It's an area that price really likes to gravitate towards, and you got to kind of catch it when it's basing. So unfortunately, there's not a whole lot more we can do with it now. But again, I'd keep this 41.95 as a decent level to go long. Top side, I really wouldn't necessarily want to be shorting this one. I do think this has the potential. And again, if that inflation number comes in lower than forecast, this one pops. I wouldn't even be. I mean, 41. We got what 41. I'll just do a horizontal. 41. Sorry, 42. 42.50. We break 42.38. The next target's going to be that kind of that 50, that little half spot in there. So, we have, inflation data that is lower than expected. I wouldn't be surprised if we go up and tag the top of that and then kind of maybe roll from there. So, again, I would stay probably bullish the rest of today after we had this drop down here. And again, the drop is a little bit late. We typically look for 10:30, 10 o'clock, 10:30 reversals. This came in at 11 o'clock, 11:15 was the reversal for the morning. Okay. Now, NQ. As you can see, NQ was off to the races as well. This one started a little early. I mean, here's the UK Open. It was at a level that we knew, again, we had already pulled back to that level once. There was a minor entry. Had you been watching this one, it would have been close depending on your platform. You guys could have maybe or maybe not gotten into this one. It was there, right? And again, that was the 6 o'clock window. We literally went up, and you can see 9:30 from the open. First candle was up, trapped everybody that, oh yeah, we're going high, right? We broke out of the Globex high, and then boom. It just literally got hammered to the downside. So this is also one of those ones that would have been painful for a lot of futures traders had they not been ready for it. Now, I would say, where this turned, it was a level. Again, we've kept this level on there because, again, we did all the basing. We gapped in there. We came back and pulled and touched it. So, I mean, again, it served its purpose on both sides at this point. It hit here. It hit here. It didn't clear it enough for us to use it as a short. And you can see it's basing in there right now. I would say this is probably more of an area to get long from, this 13,780-ish range. Question is, how much movement are we going to get today, and is it going to run all the way back up? I would say that the NQ has a little bit harder of kind of a road ahead of it. It does have two small levels, one of them being here, which was a decent kind of, it was a decent base. The candle formation is okay. There's another little kind of hiccup, right? Impulse, correction, impulse, and correction. But, I typically like when the green in this one, we can form a little triangle to the downside. I don't like it when it's the peak in there. So I would say this is a level right here. What is it? 13,841 is probably where it's going to have. This is going to be the kind of the line in the sand. If we're able to base in the middle of this zone, then again, yes, we go high. If it hits it and starts kind of trickling back down again, it's more of a short opportunity from 13,840 down to probably 13,780, probably at the bottom of this little yellow area. But remember, we jump on the 15-minute charts for these, find the levels, look for big pushes. This is ideally, this is the next major short we have up top, and that's 13,958. Okay. Again, if we start to collapse again today, we still do have a trade set up here as well. We're looking for a Harry Potter trade, a break below 13,690. So we got shorts up top, shorts here. Again, probably a little bit short in the middle. Yeah, I know it's all negative across the board, but that's what we got so far, right? Like I said, a lot of this is going to come to CPI. Okay. Now here's YM. As you guys know, YM, we were calling from this yesterday, looking for it to push back down again. You can see it did some basing. It bounced, it bounced, it bounced. It grabbed kind of the top and pulled it down. And again, same thing. This was at 9 o'clock, 9:15. We talked about being in an area of sellers, particularly on the 15-minute. Again, session open is always a big deal. Well, here's your session open at 9:15. 9:30 is right here, the second red candle. And you can see how fast it dropped to the downside. And now what has it done? It's literally pulled right back again. So it's kind of one of those plays. It's, let's see. It was a 204-point drop, and then immediate reversal, and now we are we are down 5 points total, right? We are down 0.02%. So again, people see this and they're like, oh God, look, it's going higher, it's going higher, it's going higher. Support and resistance as soon as it breaks on the open, it was green. They go long, it gets jacked down. Then they're like, oh, as soon as we break this, oh great. As soon as we break this, well, we got to go short, right? It's a swing low. And what happened? They got short, and then boom, it rallied all the way back up again. So you can see how it's definitely been one of those like manipulative, let's grab every retail trader's money we possibly can, send it straight down, and then at 11 o'clock, we reverse all the way back up, and we really have no movement at noon. And that's kind of what we're at right now. So just like it's, its younger sister, I would say that it's got two little areas here that it needs to kind of bounce through. Again, if we break above, I'll just steal this one right over here. If we break above 34,686, I think this one has the ability to run up to 34,788. We've hit that level before. We called shorts off of it before. We talked about it bouncing up and down. It did push it to the very, very brink last time, and maybe just like, depending on your platform and how you drew it, it may have peaked a little bit out the top. I would say right now that would be my upside target. If we can get there before the news CPI on Thursday, I do think that is a pretty decent level to take a short off of. And that's saying a lot. We got 2 days, but if we did something like this, and again, we're on the 15 minutes, so it's kind of like all the way down here, right? It's like all the way over here. But if we can get there, let's see, what is that? Thursday, the 10th at 8:30. I missed it by a little bit. I'll put it right over there. 8:30 is right there. If we can get over there by Thursday, that for me is a pre-news short. Reason why is because, again, I do feel that the inflationary story, I feel like, is going to send us down on Thursday as far as the indices go. Now, again, if we're all the way down here, obviously it doesn't matter. But those are the two pieces above 34,686. I do think we have a bit of a room to run, and then we'll see if it bases. And again, don't forget, I've been talking about this for a little while now. That 35,000 is sitting right up here, right? I think we're going to hit it. Before this thing turns and rolls, I feel like we are going to get up there and be able to tag that 35,000. Big number. Gotta love it. Ends in a 5 and a bunch of zeros afterwards. So definitely that's something in play for me to the downside. All right. All right, let's jump over to currency. So Aussie dollar. Yeah. This is one of those ones that's been a little bit of a disappointment. I'll extend some of these across, and I'll explain what I mean by that statement. We have kind of a smaller curve area drawn out. Now, for those of you that are new to today's broadcast, all right, when I say the curve, what I mean is not like a bell curve, right? What I use it for is basically I'm taking kind of higher time frame quality buying and selling areas, right? And I'm basically taking a Fibonacci retracement and I'm butchering it, and I'm putting one at 33 and one at 66 so I can divide it up into 3 areas. When we're at the extreme range above, for me, I am more bearish. When it's low, I am more bullish, okay? So right now you can see overall, if I kind of zoom back a little bit, right? And again, we should be on a, typically currencies the lowest I go is 30. You can see we got a lot of pink here, right? So we're already thinking bearish, but then you see another area of pink, which is kind of using lower time frame, right? You can see right now we're in the big pink, a little blue range, which is kind of a no man's land trade for me. And you can see we have kind of 2 areas boxed off. They've been there. You can see over the last, we've hit it a few different times at this point. I'm really at this point, I'm looking for a break of 77.26. The reason why is because I have what I call is a racetrack. Okay. It was a parabolic kind of retracement, right? We had a parabolic move down. We ran into a level. We came back up. We confirmed it. And then we took off. Nobody really expects it to go in 2 candles, but I am expecting the same type scenario all over again when we're able to break the 77.26. Not there yet. I would say if we start to grind higher again, this one will be affected by the news on Thursday. Levels that I like in this one, again, we got a pink on pink violence over here, 77.90, right? That's where we go full blown. Yep, like that one for shorts, particularly before news. Down here we have kind of blue on green, which again is a short term kind of green area on top of a blue, which is kind of the no man's land. But we do like the way that that not only stopped this big push down, but then took some bounces off of it. These are the fun ones because when they come out, again, this was a level way back here. These are the fun ones because when you can find a big push like this, when you can find something like a call or a knockout there where you have like multiple days of duration. I mean, this was definitely boring to watch, and all of a sudden you're like, woo, it moved a lot. Kind of looking for the same thing here, but because it is a continuation pattern, it's not necessarily a knockout, it's more of a call spread type play. So this is one of those things that I talked about. If you know how to set an alert, set yourself an alert right in here. You can add an alert. There's many ways to do it. This is TradingView. If you want something for currencies and a platform that I think does an excellent job of alerts, go over to IG.us. It's a currency platform. It's if you guys didn't know, like I mentioned earlier, IG owns it. It's the same charting that they use inside of Nadex. I think they do an excellent way. They do an excellent job of having alerts that will pop up on your desktop, but you can also send it directly to your phone, right? Because there's an app for your phone as well. So set yourselves an alert when it breaks through there. Say, hey, come back and check Aussie dollar. There's a good option for this one to be able to kind of break lower. And again, we'll see if there's a call spread or maybe even a binary. And if we could time this with some Australian news, also a great opportunity, right? Now, Aussie Yen. Aussie Yen. Yeah, this is another one of those back and forth things. We've had this level drawn for a while. We hit it and dropped, and there was the first trade. That was really the best one out of it. It hit it again, and this one also went a 3-to-1. Since that time, it's been doing a lot of 1-to-2s in there. And it's been decent at 12 pips, 17 pips here, 20 pips here. For me, I typically like things that are at least 30, and I think we got that on that the first one. We definitely got it. This one we got to, that was the low one as well, but it's stuck. And it's kind of the same thinking. We're waiting for it to come back down to the 84.40. I don't really like any of these levels to go long because of this clearing candle right here. This clearing candle took out all this analysis. So really when I'm looking at this, I'm looking at this and I'm going, this one. I look at this and go from here and then I go back and then I run down again and then my analysis doesn't start again until here. So for me, this basically looks like that, right? I'm looking for levels of big buyers and sellers, and I don't see any right now until we get all the way back down to this 84.40, and again, a little bit more conservative, probably down at 84.33. Now, could you take area? Could you take? Oops, I didn't want to move that. Could you take this another short off of there? You could. As you can see, the sellers have really held up well there, and we had sellers, sellers. Sellers. They keep putting this a little bit lower, and it does look like it is consolidating in if you're going to use this, although you probably have to use it a little bit lower. I would say a lot of this is going to depend on kind of, again, I would say this is more of an Aussie play / Chinese play. You got it here, and besides that, we're pretty much out of Aussie news until monetary policy next week. So this is going to be a yen play, I guess, at this point. Chinese news tonight, and then yen play after that. But I think, ideally, if we can get back up, and again, this level, we can take this one. I'm going to leave this one here as kind of a watch it, but not trade it. And then we're going to pull this one up here. And again, you guys can see news and news. We'll watch this on an extreme, just so we have a top and bottom kind of extreme level that we're looking for. Okay. All right, euro pound. So as you can see, we were looking for this to come up. We were really waiting for this, and we wanted to get short this position, the 86.17. This is a perfect example, right? Here's the UK Open, right? Actually, I missed it by one. There, I was on the right one. I wanted it up there. I was looking to get this one short before the move today. Had you taken a position here, and again, it's lower, right? If you had been in a traditional currency trade, right, you would have gotten stopped out on the spike. Now, this spike went from 930 straight up and then turned and rolled back down. And we know what this is. This is the World Bank Global Economic Prospects. Okay. That's where that came from. And what did it do? Nothing. It shot it up. And again, this was a decent rally up. Went up about 20 pips and then turned and we're back to where we were before. So we were already looking to get short at 86.17. This one just took a spike up. And again, you could have been alerted when it came to that level, saw it was higher and said, oh, I like this. And then when we put the red candle in, you could have got something short on a shorter duration and taken it back down again. I would say right now I am still bearish this position. The reason why is because I am pro UK right now. Not that I'm waiting for the Union Jack to come back, but again, I feel that they've just got being a single country, not like the European Union. They have it, better under grips right now. And again, any type of, we've seen some negative European news already. And again, a lot of this grind we saw from, earlier this week was, again, basically the UK doing some naughty things, right? You guys are not negotiating. You're being mean, right? Pointing a lot of fingers. But I think this one we stay bearish. And right now, I mean, really an area, areas where we could potentially get long. I mean, there's obviously this area here, right? We see this, a wick, a higher wick, a higher wick, a higher wick. We touched it and bounced, came down, bounced again. So, I mean, I would say right now, downside targets are here, right? 85.80 could be used as an area to go long from. We could just know that it's been hit twice already before, so it is a lower quality level, but it doesn't mean it couldn't be a good one, especially for a European Open, right? Remember, a lot of these little small zones, I mean, here's the European Open right there, right? So, I mean, if we get this and price is touching here, if we're able to, instead of taking this direction, if we take this from here down, that's a decent trade for a European session open, okay? Again, love those little levels that become tested, particularly at session opens. Now, Euro Yen. Euro Yen has been kind of a little bit harder to trade. We've had some spikes. We just missed this. I'd love to say that this was a great trade, but it missed by a few pips. I would say right now, Euro Yen, again, that European data that we have coming out on Thursday also, you guys remember I mentioned this? If you want to play the 745 European monetary policy statement, which again, I expect them to talk about tapering, could provide some momentum. We're talking about, hey, no, we got to extend it. Germany just extended. It's not going to be as good. Still having some problems. And then this press conference right here. If you're looking to trade that as a news release, but not really have the US dollar exposure, I mean, you will a bit because the yen is in there. But if you don't want the dollar exposure, this is how to play it over here on the euro yen. And you can watch it come up. I think 133.57 is a decent level. It provided a decent area. After that, we need to go a little bit higher up. And again, we got to kind of see where we're at. That'd be about 50 pips. It's possible we're there Thursday. But I'd really like to figure out a way to get short at 133.57, particularly again at a session open if possible, right? At a session open if possible. Longs for me are down here at 32.56, but you can see this is all pink. We're in bigger time frame pink. This is short-term pink. This is green on pink, so it's not necessarily the best of best areas to go long. Doesn't mean you can't do it. It's just not as high a quality as some of these larger ones up top. Okay. Euro dollar. All right, so Euro dollar does have something that I am interested in. For those of you that don't attend the morning sessions on YouTube, okay, the purple area right here, that is a knockout bracket, okay? I like the fact that the 122.07 area, I like that sellers have stepped in once already. They made an attempt and then got hammered. I mean, just hammered to the downside. I like that that's there. I like that if I have an alert here, this gives me about 10 pips worth of risk. I love 10 pip trades, right? 10 pip risk trades are great. If we get up there, I'm still looking for that level. I think it's something you need to keep on your radar at 122.07. I think downside, same thing, 121.12. It's an area where we had some basing. We kind of halted this big push. And then again, explosive move to the top side. Definitely has to be a target. Is there kind of a Harry Potter continuation in the middle? Probably, but again, it's going to be a little bit harder to grab. You can see the yellow area that I've marked off was a bottom. We expected it to break on number 4. It did. It came back up and kind of sliced through it. It went through and then gave us that kind of punch, and then confirmation back down again, and then got front run. So it's probably with the short up top, I would say watch out for this level here in the middle. But like I said, we're kind of sitting in the middle here. So it's a little bit riskier as far as, where we can take it. Okay. Watch that one. Pound yen. Okay. This one will have yen exposure, but the pound yen right now, it's only moved 4 pips in 24 hours. I would say that this one is basically flat to sideways. And you can see we kind of went sideways, right? Kind of did a little bit, popped up, came right back down to that same level. Popped up, went right back down, went up, kind of went lower, and then used that same level. This one is more or less just kind of going sideways. We don't have any pound data until late in the week, right? Friday, we have barely speaking, and I think that's going to be the best opportunity. It will obviously move a bit from the yen, but right now you can see we're just kind of skirting and going sideways in this no man's land. So, 4 pips in 24 hours. I mean, I guess if you caught it from the open, you're like, yeah, it's negative. Then the profit taking came in at 10, great. But it's one of those ones. I mean, this pair has the ability to move 130 to 160 a day, and we're only at 4, right? Is everything the best thing to trade every single day? No, not so much. And this is kind of one of those ones that's falling in there. But right now, I have alerts down here at 154.25. I think 153.58. It's a higher time frame. It's a decent level. And if we get to the extreme range of 155.93, also an area where I'd be willing to take this one short. And again, I'd love if we could get some news and spike up there. I mean, if we could get something over here that literally does this with like a green candle up, whoops. If I could get something like that, right? I can make it darker probably. Maybe I can. If we get a big candle up into that level, that's a trigger for me. I'm loving that trigger. I think that's I think that's got some very, very nice potential, right? But we'll see how it works out. Pound dollar. Now, pound dollar is another one of those ones. There's a knockout a little bit above, and again, depending on these two zones, you can see that they've been pushed. Here's your original area of interest. Here's your sellers. They hit it, pulled back, kind of came forward again, pop, and then it didn't get as high. So it's an area where we need to be cautious with. The last time sellers really stepped in was 141.96 on this one. We're not too far from it. I don't know what, 33 pips. It's definitely something we can overcome pretty quickly. This 142.12, again, knockout bracket. It's a little bit high, but if we spike up and get something like this, where we spike up and then immediately and it holds and comes back down a little bit and maybe bases in here, that could be a trigger for us to take this one short. Obviously, this one has a lot going on. We have UK data, we have EU data, which will affect it slightly, and then we got a lot of US data. Of the two, here's where I'm a bit cautious of this one. All right. And this is an analysis that I do that it's not an, I don't have it in, I don't think I have it in any of my classes, but it's kind of like the secret sauce that I use for a lot of things. When I'm looking to trade the dollar, I can obviously trade it against the euro dollar or the pound dollar. They tend to go in kind of the same direction, right? But think about it. If the pound is really, really strong right now, do you want to place pound strong versus dollar strong? Will that be as big a mover as if we have a euro's already weak on the day matched with a strong dollar, right? Or vice versa. A strong euro and a weak dollar will move more than a weak pound and a weak dollar. Make sense? So of the two right now, I think the pound is stronger. I think they're in a better position. Am I willing to take this one short? Yeah, if it's in the right area. But of the two, I think the higher probability is sitting over on the euro dollar side. Okay. But 141, I can move these forward so it's easier to see. 140.78, I think is decent. Again, we got to watch this level. There's some cautious there, but in an extreme range up top, it's a 142.40 for shorts as well. Now, dollar CAD, whoops, dollar CAD. We called for this one to go higher. We were looking for the break. It's been pretty choppy today. The chop back and forth is like a 17, 20 pip chop. So a little bit harder to trade, but we were looking for this to go up. We were looking for it to pull all the way up to 121.31. Again, I'm looking for the dollar CAD news tomorrow. Don't forget, we have dollar CAD news, Boc rate statement, overnight rate, and then they obviously have their talk at tomorrow at 10. I do think this does provide an interesting opportunity if we can continue to move the last little bit. It's only 27 pips. We can definitely get there. I drew it here. That's what we're waiting for, is all this dollar kind of data coming in. What are they saying this is? Auctions, don't care about the auctions. That's the API data, so it's here. I'm looking for this here. Okay. Kind of if we can get over there, right? Looking for this to get here before the news tomorrow. I like that one. I do think we will have some CAD strength coming out of that release tomorrow morning. So check it out. Also, the one caveat with the dollar CAD, I do feel that the strike width is a little bit wide, and obviously those things fluctuate back and forth. But if you're having a hard time finding something on there, again, the shorter durations are not bad. If there's going to be a move, it's going to be pretty quick. Um, and again, remember the oil inventory report will also affect the Canadian dollar because it is their #1 export. Now, dollar Swiss. Okay. Dollar Swiss is pushing lower. We had an area here, and again, it hit it. It was not an explosive move, so we wanted to be cautious with it, right? And you can see it came down at base. It kind of stuck its head out, said, no, 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 came back. No, 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 just kidding. Came back up, grabbed some more, pushed down, kind of based and pushed. And we were looking for it to come down to 89.47. I'm sorry, 89, yeah, 89.47. It didn't. It got turned around, and now it's kind of going sideways again. So I would say on this one, I'm going to remove this just because, again, we know there's an area there we need to watch out for. As far as finding clean, I think 89.33 is kind of the best of levels. The 89.47, it's okay. It's been touched. We know there's buyers in there. If there wasn't buyers in there, this would have never stopped. The question is how many are left. And again, if we can get down there before U.S. news, I mean, I would hate to say if this is still sitting here on Thursday, but I mean, it's only 20 pips. If we're there Thursday sitting on one of these two levels, yeah, that obviously is it has potential for a long, right? Because again, interest rates are higher than expected. That's raising interest rates. That's strong for the dollar. Dollar's in their first position. That leads us to kind of pop off one of these two levels. And again, I do like the lower level. I think the 89.33 is better than the 47. But before news, sometimes the market will just take us and bring us right on top. I mean, there's nothing we can do about it. Dollar yen. Yeah, there's dollar yen. So dollar yen also is an interesting situation because we have a level a little bit lower down here at 109.08. We just happen to have a knockout bracket because remember that's what purple is at 109.01. Okay, 109.01. So is it in close proximity to a level? Yes. If we got in right at that 109.08 level, that provides us with about 8 pips worth of risk. I love that. I'm all over that one. But we're going to need a little bit of help because we are now pushing and again kind of consolidating. It needs about 40 pips worth of movement. Can the API data and all that change this trajectory? Sure, it could. But right now you can see that we have sellers kind of sitting up in this level here, right? And it tends to be tested, right? It hit, came back, hit it again, got front run. So, it's a level that we can watch out for. I don't think that it's necessarily a level for, the data coming up on Thursday, the 109.57. I think the level up here would be much better. And again, this level of basing here, I am looking for longs to come out of here. If we can get a base in this level right here with a break, it wasn't going for sea green, my bad. 109.64 is something that I'm also looking for as a break. The reason why is because we had a nice racetrack. The movement higher than that one is about 46 pips. I'm only looking to grab about 30 of it. I think that provides a decent kind of risk to reward. Let me switch it the other way. It would be something along these lines, right? Right there. And again, where we would take our profit puts it at a 1 to 6.72, right? 1 to a 6.72 risk to reward ratio. My minimum is 1 to 3. This is almost 1 to 7. So again, I think it provides a decent push if we can get the right kind of setup over. And I do think this one has the ability to go higher. So again, nice little setup below. If we kind of continue to grind higher, we can use the 1 to 6.64. If for some reason we get a spike from now till the news comes in, again, we have the 110.27. Again, if we have a straight up scenario because of the news, right? If we have a candle up on Thursday, what could we do with this? We could take it and roll it back over on Friday. Okay. If the news is that great, again, parabolic retracement. All right. All right, let's go over and let's look at the red hot oil market. Basic energies in general, because the other one is crazy. So mentioned earlier today, this was kind of on the smaller side. We've talked about this big, little, big, little, big, little. We've had more of the big, little back in here where we have the little bigs, right? Little big, little big, little big, even, little big, even, little, little big, even. And then today we got a little big. Definitely a little big. Now, unfortunately, it didn't come and crash all the way into where we were looking. There was a smaller term play on this one. You guys could have got in, although talk about a very volatile open, right? I mean, you could have taken a position and said, all right, listen, I know we got some buyers sitting right here, right? No, we got some buyers. I know we got a level just below it. You said it was going to come lower in the morning broadcast. Here was a quick spike up, and literally, this is the 9:30 open candle. I mean, it literally came down, grabbed that small level and then was off to the races, and now it's stuck. Now, had you been in this trade, I applaud you. Great job. I hope to God you got out at 69.70. It's a level we've talked about. Remember, on the opposing zone, we weren't necessarily interested in getting short because we were in a trade. We're not into that reverse button, but that would have been your profit target. So this is something this morning you should have banked approximately, I don't know, $1 on. 99 cents is where it hit. I mean, if we're at 99, just click it to 100 to make it a round number. And you can see it went well past. It was, from that initial spike down, it moved up about $1.18. So taking $1 is not being greedy on that one, grabbing an extra penny or two. At this point, you got to be looking at this thing. Okay, is profit taking coming in? Will we continue to see this higher? And you may say, what the heck drove this higher? Well, I mean this. Global recovery is the fastest we've seen in 80 years. When economies recover, guess what? People drive more, people use more gas. It's there, right? Not much we can do with it now, though. I would say, if anything, look for some profit taking as it kind of tones back down again. We'll get the API, and that's actually, you can't see it on this one. We can see it on the other one. I don't know if I can do news on this one or not. I feel like I could. I had news on the other one. We saw the API settings. I have show economic news, but for some reason it doesn't show up under here, but it did show up on the dollar pairs. But anyway, API news is coming in right around here, right? So again, that API news, if it's if we have a surplus, that could lead us to run back down to that same level again. But right now I would say probably bearish in the next, until we get the API report for a couple of hours. That could really set us up. I will say, be very cognizant of where the UK Open is, particularly if this is a big miss. We're sitting right there around 3 o'clock at the UK Open. If we can maintain this level here, I would look for a rollback tomorrow and a pushback to the downside from the UK Open down. And then again, maybe another valid attempt to punch this one higher with the EIA tomorrow morning. The big one, right? The big one. The one that's not in industry, not the industry specific one, the one from the actual government. And it's already expected to be negative, right? Negative should send us higher, but we got to see what the oil play looks like first. But right now, I'd say a bit more bearish. And again, this 69.70, you guys can see we've talked about this before. Again, nice push down, nice push down, nice push down. And again, we're at that level again. It's not fresh. It's been hit a few times. It did go slightly higher, but we knew we had sellers above. Okay. Gold. Okay. Gold is whacking around this level. And if you remember earlier today, we talked and we were sitting, I was like, yeah, we're rallying back up again. We're kind of in the same spot. We're sitting right here, right? 84.60, it needed to clear. We got the clearing candles. Thankfully, we pushed down and we cleared basically down to this level. So we know, and again, the analysis with all this is so hard when it's that fuzzy. It's nice that it did turn. Now we have some type of a confirmation that we have some buyers in there. But you can see, with everything we said, it went high, it went low, it went high, and we're back in the same exact spot we were a couple hours ago. So gold is one of those things that it's like, oh, just give me some legitimate, is inflation here? Is inflation not here? Is it transitory? Is it not transitory? Obviously, gold is going to be a big one to trade. Right now, as far as hard sells and everything like that, I think 1914 is decent. We've had a big push, and I'd probably adjust this back and probably bring it down. And again, this is kind of like, for some reason, if we can drive this low before the release, I would say that 1870, the way that these candles formed here with this ascending pattern and the way that it exploded off that level with news, definitely an area of imbalance. I would say that 1870 is kind of one of those yeah, we can go long from this level. This one in here, I would say we need to watch out for. 18, where are we at here? 1882, 75-ish, right? Right in that level. Any type of news release, I think this one has the ability to go. Session open, I also think this is an area where we could really go to. But again, we erased everything we did. Here's the European session up, and then the U.S. traders got in and said, no, 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 slammed us down the equal amount, and then it pulled back, and it's right where the UK started. So we're literally at zero movement since the UK opened this morning. Yeah, how's that for a trader's market, right? Spike up, and again, it's a trap. The second, I talked about this earlier, but there's your trap. You guys see it? Here's here, right on the high. As soon as we break, oh yeah, we're going long, right? We're breaking through support and resistance. Wah, 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 all the way back down again. And kind of the same thing. Once we broke here, it went back up and really hasn't moved. So got to be quick on this one. But I think 1913 or 1914, sorry. 1914 up top. I keep missing it. 1870 down below. I think you're both good. And again, this will be a big mover on CPI. Silver, there you go. Talk about this level. And again, UK session, we drove up. US trader got in, we just slammed it back down again and ran right into these buyers. I think 27.19 I think is a decent level. We got a ways to go for that one. Up top, we got a hard kind of short up top as well, up at 28.63. Small level, and again, these are two small levels. You can see this one came up and has really chopped through it, that 27.81. That next chopping area will probably be up top, but I expect that this will be an area where we kind of really got to kind of watch out for a price. Right now, we're kind of still in that no man's land. I like it to get clean. I wouldn't have traded it off this low. You could have, right? I mean, it hit it twice and went higher, but I really want something that's clean and kind of untested lower. So 27.20. Last but not least, I'll cover natural gas. Here's natural gas, and if you remember right here, we talked about how natural gas was spiking, and I said, hey, listen, you guys got to be thinking parabolic retracement for any of the trade natural gas. Wait for this. And I said, if we get a pattern, something like this, where we get a push up and then kind of a failure, look for a rollover. Well, there was your push. There was your failure to go higher. There was your close below, sitting right there, right? And now we're off to the races, and we've dropped about another penny or two below. So I wouldn't be surprised if this one comes back down and really tries to push back down to this level, right? But this has been a big UK session started here. That's a big moving day, right? That's a big moving day in natural gas. So again, we don't talk about natural gas too often. I don't throw it out there, but remember, natural gas does have its inventory report on Thursday as well. So just something else you can take advantage of. TLT is moving. Looks like cryptos are all down. GME is moving. If you guys didn't hear earlier, I did see that the same people, the same Reddit traders that were calling AMC and GME higher, and also said silver would be at $100 by the end of the year, which I don't think it is. It's only at 27 right now and not going higher. They just called BlackBerry, which I didn't even know. I didn't realize BlackBerry was still out there. I don't know if they're doing phones still or what. I don't know anybody with a BlackBerry phone anymore. Everybody loved them, and then they just kind of disappeared. But supposedly that's the next one. So they're 2 for 1 as far as where prices are going to go right now. And actually, I guess they said Bitcoin was going to go to 100,000, and yeah, you guys see where that's at right now. It's at 32,000. Right, 32,000. So it's not quite at the 100K mark. So I guess they're two and two, but who knows? Anyway, that is it for today. We went through a lot. I tried to go quick and get it all in there. Make sure you guys mark off your calendars. Tuesday, June 15th. And actually, don't forget, June 15th is our midday broadcast. On June 22nd, we have an education summit on trading currencies. So if you're new to it, get there. I'm trying to get approved right now. Everything I do has to be approved by compliance, obviously. I'm actually trying to give something away to you guys, and I don't think I'll have any issues getting it through. But anybody that attends on the 22nd will automatically have free access to something that I do. That if you guys love my levels and want to figure out how I'm trading these levels, I'm going to give you guys access to my levels for a month, as long as it is approved. So I think I don't see an issue with it. But again, just mark your calendars for the 22nd. Make sure you guys register, so that way you guys can be there if it's available. All right. So with that said, I am out of here. You guys have a great trading day. Look for that API number tonight. Watch tomorrow morning, and get your popcorn ready for Thursday morning. You guys take care. Thanks so much.